please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Well, we have with us Mr. Umesh Revankar, Managing Director of Shriram Transport Finance. Mr. Revankar, this is clearly coming out from the annual report and it has troubled the market. Can you tell us, have you spoken to your lawyers and therefore legally what might be the implications for Shriram Transport if, people call for these guarantees, people who are who have taken Shriram EPC to NCLT?
The legal part of it we have not studied yet because this maturity is another 1 year to go, and we are quite confident that this will be serviced. So we have not really gone into that kind of evaluation of what should be the next step.
Okay, so Mr. Revankar, you're saying that you're confident that you'll be able to honor these NCD repayments and that, some of your unlisted companies like SVL, etc., may not be under financial stress?
Yes.
Okay. But that 870 crore will move out of your balance sheet, right? Or, I mean, out of your P&L?
No, see, we have given a guarantee, and once it is serviced, then it will not be in the balance sheet.
SVL will service it?
Next year, June is the maturity.
Okay.
Yeah, next year, June is the maturity.
Okay, so June 2019 is the maturity. Any additional provisions that may be needed?
Right now, we feel that it will be serviced, so we don't see any reason for provision.
Okay. What are SVL's businesses? Can you give some more comfort to your investors that SVL will be able to service that NCD?
They have a multiple business. SVL is a holding company, and they have a multiple businesses. It is too many details. I'll not be able to tell you here. But I think the business is doing well, and there are sufficient contracts in hand.
Okay.
So I feel they should be able to come out successfully.
Okay, can you just tell us what is the exact outstanding corporate guarantee that you have to SVL and any other unlisted group entities to which you have these exposures?
No, this is the only one. So this was a commercial loan and given to them. Then it was shifted to bank because of pricing. The pricing was much better with the bank. Then it was moved to bank, and we gave the guarantee, and we are confident that this will be able to service.
Okay. All right. Let's come to your sales performance itself. Mr. Revankar, the FY18 numbers were a big improvement over the FY17 numbers. Has the CV cycle continued to remain good? Can you give us some idea of how the first quarter was?
The first quarter is quite good. See, one thing is the numbers look very rosy now, CV sales versus last year. But last year we have to understand that sales were depressed because of non-availability of BS4 vehicle. The new vehicle sales was down in the first quarter. It picked up only in the month of September. So that the year-on-year comparison may not be appropriate.
Yes.
But I still feel that sales was quite good, and I see a robust demand, and the demand is quite good from the rural area especially. So, and used vehicle demand seems to be continuous.
Okay, I'm sorry to keep coming back to this issue because, the street is a bit concerned about the possibility of these guarantees being invoked and perhaps hitting your balance sheet as well. So just a few more clarifications. What is the cash flow situation currently at SVL and the other subsidiaries as well? And will it be adequate to service the NCDs, the cash flows even in other subsidiaries?
See, it is not just cash flow. There are other possibilities which we are exploring. So almost every quarter we review the situation, and there is adequate security against that guarantee. So the security, which is valuation given by the reputed company. So we have enough security on that. So I don't see any concern on that.
Okay, although you do have adequate security, if SVL defaults on the NCDs, what is the cash flow situation currently on the books?
I'll not be able to talk about the cash flow situation, but I think, see, we have been, board has been discussing this in every quarter, and we are getting reasonably good comfort on the situation.
Okay. Can't you give us any idea at all on SVL's balance sheet or P&L? Which can comfort. I mean, I just want to tell you, sir, since your annual report has come out, the stock is down 11% today. So if you can give us some idea of the, position of SVL and its ability to service those NCDs, it will go a long way to assuage the fears of your investors.
There is a multiple way of servicing the outstanding amount. So cash flow is not the only way. So I feel the group will find a solution, and definitely the adequate coverage is there on the loan, on the guarantee given by us, and we are very confident that things will be serviced and addressed.
Okay. Are you going to be raising any capital? That is Shriram Transport?
We are not raising any capital. No, we are not planning any capital raise right now.
Okay, so you won't have to make any additional provisioning for this non-funded exposure, right?
No, right now we have not thought about it. We will take the call during our board meeting, in this first quarter board meeting, and then we will take a call whether we need to do or not. So I think it is a board that will take a call on the same.
Okay, so the reason Lata asked you about the capital raising is because if you do have additional provisioning, then that may hit your tier 1 capital as well. So you might need to raise capital going ahead. So, I mean, if provisioning is made, are you looking at any kind of capital raising, say, over the next, say, 6 to 12 months?
No, see, for our growth, we have been planning for a capital raise in this year. Maybe we thought it towards the end of this year.
Okay.
It's mostly for the growth in the future, not exactly for this reason.
Okay. But does Ind AS require you to dynamically provide for events like this, for NCDs like this, which you have guaranteed?
See, if we feel or if we have any doubt on the serviceability, then only we need to do it. Okay. Otherwise, we need not.
And at the moment, you're not in doubt?
Adequate coverage, yeah, we are not in doubt.
Okay, all right.
Just one final question from my end. The investments that SVL has, in infrastructure, EPC, renewable power, etc., are we seeing any kind of financial stress in many of these pockets for the business?
Yes, some of these businesses are going through stress, and some are getting out of the stress. So this business is a long gestation business. So you cannot definitely say when you are out of the stress. But I think they should be able to get out of the stress level over the period.
Okay, the earlier years' annual reports does not really include this guarantee disclosure, although the loan was given a few years back. Why is that?
No, it was shown under contingent liability guarantee. It was shown. It is not that it is not shown. It was always there. But this time we have shown it explicitly.
No, is it an Ind AS requirement, and is that why it is shown?
No, not exactly that. We felt it is better to have more. We wanted to give a little more details on the various guarantees given. Therefore, we had shown.
Okay, sorry to keep probing you on this, but we are getting sort of a lot of queries on what's happening here with the annual report. On the coming back to the SVL investments, I was asking you about the pressure there. Is it true that many of these operating entities like Orient Green Power, Haldia, Coke, SVL itself, and other key investee companies have defaulted on their debt and interest obligations in the past?
I don't have full detail, but there could be some delays in payments. There could be.
Okay, delays. But Mr. Revankar, would you have a little more detail as to whether they defaulted? Because some reports are suggesting that.
Could be. I don't have the full detail as of now. I'm not able to tell authentically on that.
Okay. All right. Well, just a word on coming back to your major business. Are you going to see any pressure on margins because the market rates have risen, wholesale rates?
Not really, because we feel that 15 to 20 basis point increase could be there for the full year, which we would be able to pass it on because we are in a niche segment of used vehicle and in the rural segment. So it is reasonably comfortable to pass it on. So I don't see any pressure on the net interest margin.